Good afternoon, guys. I hope everybody's doing well. Today I'm going to take you on the recap of the session we had today. Today is the 21st of January and we are going to be scalping the New York session. The first thing I did was to mark out the high, the middle and the midpoint of the bearish candle, the bearish engulfing candle on the 1 hour. Because the gold was at the all-time high, and there was a nice rejection at that all-time high with that engulfing candle. So I started to mark out the entire engulfing candle and I was going to scalp it. Dropping down in the 5 minute, the 5 minute liquidity was taken. As you can see right there, I marked the liquidity right there. 5 minute liquidity was taken and it made the normal drop down to the 1 minute and scalp. So this 5 minute liquidity was taken. I dropped down to the 1 minute and I took my entry on the 1 minute. The entry when I went to the 1 minute, I waited for a change of character to the upside with inefficiency, and then I put my entry at the consequent encouragement of the fair value gap. Put my stop loss at the low, the recent low that was formed, and my target was 2 hours. I could target the top of the range being the entire engulfing candle of that one other that I've marked right there, but 2 hours is a good ratio to take. Targeting either that 2 hours or the top of the range could have been really good. So just had to wait and see how the trade plays out. Since the gold was at the all-time high, with that sudden bearish move, the accumulation on the 5 minute was a little bit intense because the market was still trying to decide if gold starts its bearish phase or this might just be a little pullback to continue. Yeah, on 1 minute you can see the accumulation. The reason why I came in already onto this trade, despite all those accumulations, was because no matter how inconsistent that decision was, the market still kept making higher lows. As you can look, the market was accumulating, but it was still making higher lows. So with that in mind, it's accumulating, but it's not going towards our stop loss. So with that in mind, I was holding this trade without fear or without any need to worry. As you can see right here, the higher lows. See, the market kept forming higher lows. The market was accumulating, but it still kept forming higher lows, indicating that we are accumulating, but the market is failing to make a change in delivery to the downside. So the buys are still very solid. And never forget, once your trade reaches 1 hour, set your break even. The truth I made goes into a 1 hour. But yeah, I think at this point I set my break even and I was waiting for the market to go to take profit. At this point my break even was set. Some people take partials. Some people take partials when the trade is in positions like this, but I didn't take partials. Either my take profit or my stop loss or my break even. Right now we're just waiting to see if the market was going to hit our take profit. It was a good trade, and as you can see, there's enough demand to push it to the upside. So the market might want to test the top of the range, and the range is that 1 hour engulfing candle that we marked out. At the top of the range, the top averaging be the all-time high. Testing the top of that range, be testing the all-time high. So if market is doing back to the all-time high, they will test the top of the range. I will see what to do at that point. But if the market fails to reach the all-time high or fails to test it, then the market will most likely test the bottom of that range, which is that engulfing bearish candle of the 1 hour. And actually that's what we want to see. So right now we're just waiting to see what's going to happen. See, the market is failing to test the top of the range. The market was failing to test the all-time high. You can see it's a rejection there. At that area, the market is failing. There are more sellers, there are more people willing to sell going at that price than they are willing to buy. What the market is telling us is that area, people are finding gold too expensive to buy. So people who are be holding the low positions might be looking to close them around that area. People that low position might be looking to close. And when closing your low positions, to close your low positions will be a sell order. So if most people are willing to close their low positions at that price, then the market might drop. But if they are not ready to close their positions at that price and they keep adding to their positions, they might see a push to make another all-time high. So we'll just keep that in mind and holding our trade. It was a good trade. It was actually a good trade. It was a big trade. See, people willing to buy at that price. It's crazy. It's crazy out here. Are willing to spend so much money on gold. It's crazy. As expensive as gold is, best believe that there were people who still willing to purchase gold at that price. Market was almost at our TP. Give us some days and some other pairs. I might have closed that trade up there, but now not today. It's either we'll hit our break even or we're going to take that TP. You see that price, they're about to test the all-time high. People are not willing to continue buying at that price. They're not willing to buy gold at that price. You can see that sudden drops, and those drops may indicate that people are taking their profits. And the more people take their profits, those orders are about to be sell orders. And if no people take their profits up there, and people are not willing to buy gold at that price, then gold might drop, supporting what the market was telling us on the 1 hour. Right, I see right there, the market was dropping pretty hard. People were not willing to buy gold at that price. The price was too expensive. There it is. People were not willing to buy gold at that price. So I think most people were taking their profits at that price. The gold was dropping. Back now, oof, look at that. This is why it's good to have a good broker. Because if you do not have a good broker, on the way that price dropped, you might encounter a little problem with slippage. Maybe your stop loss was set to about minus 500 or minus 1000, but due to slippage, if your broker does not have a very good information on the slippage, that right there, that note right there, will take note than you intended to give. So it's also good to have a good broker. Where you need to look for a good broker that will relate to slippage very well. or if I say a broker that has a very tight slip ratio rate, it's good to be able to protect your funds. So right now the market is trying to tell us that the lower tariff rate might be aligning the higher tariff rate. So what we're waiting to see is if the market is going to test the midpoint of that range, to take the midpoint of that range and reject. The midpoint of that range should act like a resistance point where buyers are not willing to buy above that area. So people are willing to sell there and people are willing to cash out their profits there. So if people are willing to sell there and most people are willing to cash out their profits there, the market is going to drop, giving us a good opportunity to sell. There it is. The market was at the bottom of the range. We need to see where the bottom of the range is going to act like a support or resistance. Are more people willing to take their profits here? Are more people willing to sell here? What is the market saying? And as you can see, during this session, people were not sure what to do. People were not sure if the uptrend has ended, if gold lost to reject from its all-time high. So there's a lot of noise. There's a lot of noise in that area. But we're just waiting to see what will happen. We need that midpoint. People us to take a trade. Judging by this, I would love to take a trade at that midpoint. And I think maybe that's what we eventually did. So I'm just waiting to see how the market reacts at that midpoint. If the market reacts well at that midpoint, and the midpoint acts like a point of resistance, that will indicate that the market has sold a little bit and it's a retracement back to the 50% of that original 1 hour candle and gave us the engulfing to the downside. So that will indicate the market has tested the 50% of that candle, broken down. The 50% has acted as a resistance, and now the market is going now to test it. The 50% of that candle will be the midpoint marked out there on my charts. So we want that midpoint, that 50%, to act as a point of resistance, because following any, for any big move, where you see big moves in the market is most likely going to retrace at least 50% of that egregious move before continuing that move, if it's to continue that move. So the market is most likely going to retrace 50% of every impulsive move before continuing. And I take my own first based on the higher tariff rate. He has a very impulsive move on the higher tariff rate, and I love for the market to retrace about 50% of that move and then deliver in the direction of the move. So that's what I was expecting to happen during this session. Let's just So as we can see, the market has come back to the midpoint, which is the 50% of that original impulsive move that gave us the engulfing candle on the 1 hour. And that is what we want to see. This is what I wanted to see. If the market comes back to that midpoint and rejects. So now that midpoint is actually acting long as a resistance. As I resist that 50% now becomes our PLI. That's what we would love to take a trade. So now all we need to do is wait to see if the market comes back to that POI and gives us a trade. And now the time was 9:30. So during the 9:30, I love scalping the 9:30 opening edge, the ORB of the 9:30. and I will scalp or above the 930 in relation to what I am seeing. Because right now, we want the market to retest that 50% of our initial impulsive move on the 1 hour and give us our entry there. So I would love for my minimum range to be in that area. As you can see, the market was pushing, testing that 50% of that rated impulsive move. When I was testing that 50%, again doing the opening range of a New York session. The opening range was still within that area, which means that the market is still trying to decide if they will make another all-time high or they're going to retrace 50% or 0.618% of the move and then distribute to the downside. So we love the market to accumulate here, do the opening range. We're going to mark out our opening range and then we're going to trade the opening range right there. So through the opening range, we'll mark out the high and the low of the first 15-minute candle. The first 15-minute candle is 15 1-minute candles. So if you're in the 1-minute time frame, you can just wait for the first 15 1-minute candles to form, or you can go to the 15-minute time frame, you can wait for the 15-minute candle to form. When that candle forms, you mark the high, the low, and the midpoint. You're going to use that as a reference. And I'm going to use this opening range as a reference to take the trades that coincides with our original bias. And right now, original bias is we want the market to retest the 50% of the impulsive move from that all-time high and distribute to the downside. So where bias here was bearish, but that does not mean if we see a good buy trades, we will not take it. We'll take them, but we'll be cautious while taking those buy trades. But initially, we want a setup that will coincide with what we are seeing. And with that, at this point, and I was waiting for the market to either break the high or the low with the candle close. I was waiting for the breakout with the candle close. If the market broke out from the high with the candle close, well, all I need to do is wait to take my entries at the midpoint. I wait the market to retrace a little bit at the midpoint and I take my entries. Well, as you can see, the market broke down with the candle close, but on the downside, added an extra preference to our bearish bias. So I place my limit order at the midpoint, put my stop loss a little bit above the higher that was formed during that range, a little bit above the, and we wait patiently. I was risking about 1% of my capital. I risk about 1% of my capital for every trade. I don't risk more than 1% of my capital. And for trades that I am not so sure or certain that I'm not really quite confident, I use 0.25% of my capital for 0.5%. And then conservative when I'm trading, I don't rush, and I definitely do not like to FOMO. So when you are waiting for our limit order to be taken, what will limit order to be taken? So now it's just a gain of patience. And our candle is 2R. With that candle 2I, all we candle the opposing liquidity. During this session, I did not candle 2R, that's I target the opposing liquidity, but I put my take profit on the trend line, because if the market rejects at that 50% of that impulsive move, the market might tell to move at least 100% of that move, of the entire of that candle. If you measure the candle, if you can measure the candle that made the impulsive move to the downside, if the market were to retrace and we get rejected at the 50%, the market is most likely to make 100% of that move. Indicate that that is where they want to distribute. The distribution is always higher. So I was told that the market might retest 50%. It has retested 1, 2, 3. It has retested multiple times. As you can see, it has retested multiple times. So we're waiting for the market to pick out our buy limit, and the market, you can see that the market took our buy limit. So now what we want to see is the market distributing to the downside, at least distribute at least 50% or 100% from the midpoint. This trade was almost a 3-hour trade. Earnings were risking 1 for 3. And that's it. We're just patient. We're patiently waiting to see what was going to happen. Will the market expect the 50% retracement and then distribute to the downside, or will gold make another all-time high from the position we are in? When you're conservative your capital, when you're taking your trades and you're not cautious, that means you do not over leverage. If you find yourself in a position where you've taken a trade and you're so anxious, you might have over leveraged for that trade. That's why you're so anxious. In trading, you have to be able to be relaxed while trading, to be able to make better decisions. Don't over leverage your trades. Don't over leverage your trade. Because when you over leverage your trades, it builds bad habits. It builds very bad habits, and you might blow your account, and you might end up losing your money, and you'll be saying that no, trading is difficult or trading is a scam. So always ensure that you use a lot size. Use a lot size that will not make you anxious. If you are anxious, you're over leveraged, reduce your lot size. So now we're waiting to see what will the market give us. Is the market going to distribute to the downside, or is the market going to take from us? One way or another, is either you take from the market will take from you. The question is, how much is the market taking from you, and how much are you taking from the market? So the most important thing is you have to ask yourself. You might be taking from the market, but the market is taking more from you. That does not mean you're not taking. You're taking, but the market is taking more from you. So you have to ensure that you're taking more from the market than the market is taking from you. You're risking 1, you target 2. You're risking 1, you target 3. And don't forget to always say your break even when your trade reaches your 1 hour. That's how I trade. This my trading setup has helped me to save a lot of capital. It's always helping me to be conservative. If the trade reaches my 1 hour and breaks even, that means there was not enough momentum to take me to my take profit. That's how I trade. So as you can see, sharp movement. This is how we want the trade to move. They take trades like this is how you want them to move. You need to see momentum. You need for that momentum to reach the TP as soon as possible. If the trades accumulating after taking your 1 hour, that means there might not be enough momentum to hit TP. So this was a nice trip. It was nice momentum. We predicted the market very well. We reacted to the market very well. We executed very well. Everything was set and everything was nice. So I hope you have learned a lot from this video. If you have any questions, you can write them in the comment section, and I'll be sure to make a video answering your questions. And this comes to the end of the session. Don't forget to comment, to like, and to subscribe.